Hi, this is Randy Finney with the right side of the chart, and this is a mid-session update for Friday, June 24th, 2022. This will be a very brief update. Let's just keep this one focused on the equity markets. Anything else that stands out, I'll cover. But right now, this seems to be a very profitable trade, working out well. Got some additional check marks today on my near-term bullish case, and that's what I'll go over the charts real quick, and we'll wrap this up. This is the 15-minute I got out to you today. Got that one out to you this morning, and you can give you targets up to about the 302-ish level right there on QQQ. And again, near-term targets. That coincides with that. Again, when I speak, near-term means what could be hit within the next week or so, or even a few days. And then intermediate term would be those longer-term targets I've given you, which is potentially up to about a 30% or so rally in the Nasdaq 100 if hit. But near-term, what we're looking at here is this 15-minute chart. So this morning, and recently, I told you all these gaps just really working out well. There's a gap right there, the most recent gap besides today. You can see we pulled back to it, back tested it from above. That's the gap right there. And you had this gap here. You had this one here, which carried over. And then today we had, we ran up, effectively hit that 294 level. Remember, again, I have to reiterate this because I know there's new people coming to the site all the time. The charts I used to back in the day do adjusted targets where I'd come down below a level, but that gets confusing. Especially, it's a lot more efficient for me to go ahead and crank these charts out, leave the actual resistance levels. But remember, if you are targeting, let's say 299 or 299.32, you don't want to put your sell limit order at 299.32, the top of this gap right here. You want to have your order a little bit below that, because it is more than common, as what happened today, is sellers will see a level and step in early. So that's number one. So effectively that target was hit close enough. We got that little pullback, which I then did a follow-up post and told you we have this potential bull flag continuation pattern. Bull flag continuation pattern. Excuse me, it's Friday. Consists of three different components. You have an impulsive move up, i.e. the flagpole. So you could either take that from where we closed yesterday. Remember, a gap, you don't see any green candlesticks here, but a gap is even more powerful than a strong green candle, because it means we went straight up in price. Now, the futures, of course, went up there. So if you're looking at NQ, you're not going to see the gap. So you can use that as the flagpole, and if you add that in, you take the flagpole, the move leading up to the top of the flag. Then you have the flag, which you want to see that happening on declining volume, so the sellers are taking profit, but it's much less impulsive. The big volume is on the impulsive move up on the flag. And then you add the length of the flagpole to the bottom of the flag, and that would give your measured target. If you do it that way, it's going to take you, and I'm just eyeballing this one. The way to do it, you can make a trend line and then duplicate that trend line and add it. That would be a backfill of the gap, or if you want to say from right here, because we did have a pretty impulsive lift towards the end of the day yesterday. Here, I'll show you how you do it here, and every charting platform is a little different, but you just take a trend line. Then you can either click to duplicate that trend line, or create a parallel trend line like that, or you can just move it, and that would project a little bit past there. But the way I do this is, even if I was going off that one, I would 100% prefer to take profit at the resistance level that comes in a little below. There's actually some support there as well. I'll even put that line right now, because I can see within there you did have quite a few reactions around where that measured target goes up to about 304. So you could really call this a T4 zone, or target zone, I should say. I forget the sequence of the targets here. And that's that. So right now we have a breakout there of the flag, and again, you can either do that flagpole or the shorter one like this if you want to go from the gap up today, and it comes there, and then that one lines up perfectly with that 299. And look, sellers are going to see that gap. They've been trading these gaps like crazy, so you probably get a reaction there. No guarantees. Also keep an eye, I always say, what's going on NQ, the Nasdaq 100 futures, ES, the S&P 500 futures, SPY, and the other indexes. So we'll see if this carries through. Ideally, you want to start to see some impulsive buying soon. Not absolutely necessary, but that's typically the nature of a bull flag continuation pattern. You have the impulsive leg up, the flagpole, and then the consolidation that takes the form of a flag and then another impulsive leg up. So we'll see if we get that into the close today, or if they just take profits. Now, all right, so the reason I'm doing this video is talk about, okay, well, that's one likely scenario there. But as I said on the chart I gave you this morning, I also gave you support levels below. We were right here this morning, just taking out that one. We gapped up, took out 288.46. So when I got the first chart out to you, that level had been taken out, and that was a buy. And we didn't look back, ran up to the next target. But the way it works is if we pull back, well, 288.50-ish, we'll call it. That is support. You have a gap right there, right? The top of the gap, right? Make it a big mess here. There's your gap right here, right? And so if they don't buy the top of the gap, if they enter the gap, and there is today's low, technically the gap is right there where a gap opened up to. It's a little bit below this gap right here, the top of that gap. So that's what you'd want to use is this one right here, today's gap. And that's an objective long entry. If you share my mindset and positioning, and you want to, you're bullish right now, and you're going to be bullish going into next week. Because remember, today's Friday. Anything you buy today, if you're a swing trader, you take it home with you. If you're a day trader, sure, you can game a little rips and dips. Go long here, sell the first resistance, short the pullback, and then close all your positions by the end of the day. Technically, that's what a day trader does. They don't have any overnight risk. And remember, futures, typically you don't have overnight risk either way, because the futures are trading around the clock from Sunday evening through Friday shortly after the market closed, but then they shut down. So you do have, traders have 2 nights of overnight risk on a weekend. Futures traders do, that is. All right, so that's it. Let's keep it simple. Any pullbacks to those levels? Right now, this would be a big level that quote unquote should hold. Why? Let's jump down to the 5-minute chart and I'll give you a refresher of something I pointed out yesterday and the day before, I believe, is this symmetrical triangle. I'm sorry, not symmetrical, ascending. This is an ascending triangle pattern. You have upward sloping line below and a parallel or a flat trend line above. And the measured target, which I put right here, is just the widest part of the pattern. They're inherently bullish. And as I said the other day, this was at trading range. I talked about this for the past several days, saying this is like a coiled spring building energy or in a tight trading range, and your buy signal would come on a break above it. And if so, and that was impulsive, we gapped above it. Doesn't get any better than that. And that's also why, I thought it was favorable to be positioned in advance, because the upside break looked like the most likely scenario. And so therefore you didn't have to chase a gap. Or you could have, if you had a starter position in here or at the divergent low. Remember, this is where I flipped and started accumulating longs. We had positive divergence at the low here. So far we're good for whether it's, it'll prove to be a short-lived bear market rally or not. So far we're good for about a 9% rally on QQQ. And again, because I have an additional check mark today with the breakout of the ascending triangle pattern and the trading range, that gives me an additional check mark for my near to intermediate term bullish case. So it's a matter of, okay, do we pull back? And if we do, I gave you the levels on that previous 15-minute chart we were just covering. And you also have this uptrend line off the lows. And look how that uptrend line comes in with the top of the symmetrical triangle, aka the top of this recent trading range. So boom, that would be a really nice objective long entry right there. You can keep a relatively tight stop below, or the next support will be the bottom of that range, then a gap right there. Again, I want to see this level hold because you have both the near-term uptrend line and this breakout of this trading range. This would where I most likely will start to peel out of, meaning scale out of any shorts if we break the bottom in that range. If we happen to take out the trend line, because that should hold there, and then below that gap as well. So I'd have staggered stops right there. At this point, I'll even raise stops to protect profits because it's been obviously quite profitable over the last week or so since starting to take some longs here. 60-minute chart, nothing's changed. That's the busy version. In the daily chart, again, if you're just catching up, I know this is a very cluttered chart here. I can take all the lines off and just show you what the potential longer term target I'm talking about there. There's a downtrend line off the highs. This red line here, it comes back here. The red and the blue together, they are the 200-day exponential moving average in red and the 200-day simple in blue. They come in there. Those lines are key moving averages, especially on tech-heavy indices like the Nasdaq 100. They proved as expected. They were highlighted as objective shorting entries here on the kickback to those levels, as well as the one right there. So it was a 200-day that simple that stopped those advances. But a lot of traders will also use the 200 exponential. And like I said, right now, the red line, the 200-day exponential moving average, comes in right in line with the trend line. Hold on, battery just died on my mouse. I'm trying to scroll back to where I was, and all right, that was it. So you had the downtrend line there. You also have just keep let's keep an open mind here. As far as the potential bullish case goes, you could have a trend line that comes all the way off the all-time high in the Nasdaq 100 back in November, and then captures these highs here from late December, and that's about when the S&P 500 topped, and that would be a even bigger rally. So I'm open to anything, and still very much open to the fact that this bear market rally gets sold into. But at this point in time, like I said, I've if nothing else, it's given me that additional checkbox, and I will most certainly be going home long into the weekend as well. We're coming off this big divergent low right there. And then, of course, all the other reasons, including really liking how the market-leading FANGs are shaping. And actually give it a little zone right here. So there's one potential swing target zone, and that would align a little bit higher. Remember, on the 60-minute chart, those near-term target was the bottom of this cluster right here. Remember, we had this area of consolidation that broke down. So that's what I gave you on that 15-minute chart and the recent 60-minute charts. But then if we can take that out, which again, I'm looking at something like this. So minimum there, at least near term. There it is, rally up there, probably get a reaction, work our way up there. And, depending on how things play out, if we're going to go up higher, I don't expect new highs, but that would be about the max bounce target. That was a key level early on in the bear market. And remember, every bear market is different. I was highlighting some analogs, similarities between this and previous bear markets up until this point. It worked well for us, but I've kind of moved away from that now, and would caution you, and a lot of people like to jump on it now and show you 1929 or 1987, all these other years. First of all, 29 and 87 can't happen anymore, guys. It can't happen since 1987 because of circuit breakers, things that were implemented. So you can certainly drop. You're just not going to drop as fast as 87 or 29. Those crashes because of the circuit breakers that were implemented in the wake of Black Monday in 1987, when the Dow fell was like 23% in a day, I think it was. Okay, and I promised you a short video. Let's just go back to this 15-minute chart. It's clean. So what would open the door for that final leg down to the bear market? Or what I'm trying to use my words carefully. I refer to it as my initial bear market target, which is T4 down here, and that would hold even if we get that big 30+% rally up there, or even all the way, maximum all the way up to these highs up here. That would just be a counter trend rally. And again, bear market rallies are powerful. And that's why, as a flexible trader, I love to trade them. So that would be, a potential scenario. Or I think I said it earlier this week. We could just crap down next week, and I think it'll be relatively swift. So the key word here I like to use is stay flexible and nimble. Adapt to what happens in the charts. We all have our own biases. I can see that from the comment section below. There are quite a few of you that are, some of you say you're cautiously bullish, like I was, and I'm a little less cautious than I was yesterday because of the additional bullish evidence today. But Still, with that being said, that would be the word I'd use. And then quite a few of you think there's more downside and that we're not going to bounce, or weren't going to, maybe you might have changed your mind today. It's a pretty good up day. A lot of buying pressure. And again, I have my own biases, obviously. And these clowns that they get out there and tell you, just trade the charts, trade what's in front of you. If you don't have a bias or a view or position, then it's paralysis by analysis, or you're going to just sit there and not take a trade, because at any point in time I can make a bullish case or a bearish case. Say, Randy, do a video and make a bearish case that this market's going to crap out and drop from here, and I can do that. And I did it yesterday. I showed you quite a few sectors and key stocks that are just below support, and others that are right on support. So if we fail there, boom, the next leg comes down. But again, I have to pick a side, and right now the evidence skews me. It tells me to be long. The risk reward favors being long at this point in time, and if that changes, I will let you know, and I will adjust quickly. And where will I start adjusting? Well, I already gave you those levels today. I'd really like to see this level hold right there. That's a big one to me. I can tell you another way to explain this to you, how I trade, my mindset. I will not add to long positions on a break below 285.50. As I said, I will most likely start to scale out somewhere in there, part of my position. Maybe I can change my mind on a dime. And again, under 280. So to me, I'll buy pullbacks down to that level. I'll add to, but not below. And that also is a function of how I'm micromanaging my positions. I took some profits today at the highs, expecting to pull back, set some sell limits just a little bit below the those targets. And it wasn't just QQQ. Remember, you have NQ. This is a level I had on the chart, or I've added this chart. It was right here by this reaction high. This is let me go back to a little bit longer time period here so you can see NQ, Nasdaq 100 futures. Pull it back. And so 12, about a little north of 1200 resistance, and then I also had a level right here. I have a level about 12,100 that comes into play. It was a pretty nice resistance back here. 1, 2, 3, multiple reactions there, and that's that line. So that's where I had a little. I figured that was coinciding with, it was the closest level I had to that resistance I gave you on the QQQ 15-minute today. So that's where I believe the pullback was likely. And look, we can come all the way down here, and there's another near-term uptrend line. So you have the primary uptrend line right there off the lows, same one I gave you on QQQ. Again, this is a 60-minute chart NQ. And then you have this secondary trend line right here. And then you also have really good support. That yellow level there is about 11,707. So again, to me, any pullbacks to that level, if we get them, are buying opportunities. Anything below there would start to be a rut row moment, But there's that uptrend line, as I talked about. So I should clarify, not just a minor trend line, up to this primary uptrend line. Those are buying ops. Anything below that starts to call this rally into question and starts to increase the odds. With each tick down, the odds go up that you're going to take a run at and probably take out those lows. It's not an all or none. That's not a short below this line here, long above it, but it's where I do not continue to add to any longs at that point, and I'm more interested in stopping out of the ones that I do have. Hopefully that makes sense. As of now, I'm still looking for a move up here to the bottom of that trading range. That would be that 12,452 level right here. Or I give you some levels below. And I told you before, when we get there, this is sort of a target range, if you will. And I'll probably either take full profits on some of my NQ contracts there, or scale out as we go up, set some stops and let it run up to that point. But I do expect, if we get to the bottom of that range, of reaction. So that's it. So that's my near-term outlook for next week. Fully open to the pullback scenario, but leaning this way now. I think today's move was a pretty powerful breakout. Good stuff. And again, you can see here, this is the big level right there. It was 11,700. You had a lot of, you had a big, even a gap there in the futures. You had a lot of reaction highs recently. You had that symmetrical, or ascending triangle pattern, which I showed you on the QQQ 5-minute chart, and you broke out. And you can even see here on the futures, a little flagging action right there. Look at that. we had, I remember the futures are going to tell you a different story than the QQQ. The impulsive leg up, flagging action, and you broke out of that bull flag right there. And then just a follow up on ES. I gave you this level here the other day. I told you it would be, I wanted to see that break out for a buy signal in ES. It was 38.55-ish right there. And that was that reaction low. There's another reaction low. We had that whipsaw, call it the Maui whipsaw bear trap. That week I was on vacation. Then we came back, and once we broke it here, you broke it, you tried to regain it, you got rejected. That helped to validate that level as resistance, and boom, that was taken out today. So that's also bullish. You also could draw an uptrend line off the lows. You can have one right here, a little steeper, or the primary trend line there, just like NQ. So those are your two trend lines to buy pullbacks to if we get it. But the way the markets tend to work is that would make it almost too easy, and it maybe sometimes is that easy if it's going to, if we're going up here. I'd still maintain these levels here, that 40.73, which is the bottom of that comparable trading range I was highlighting on NQ earlier, and QQQ, but you also have a downtrend line that comes in a little bit below that. So that's just like QQQ. You got to be careful because where all eyes might be on this level, that is better resistance. It's more reactions there, very good resistance. But you may see the sellers step in early on this downtrend line right there, which is going to come in a little bit below it. So again, it's a close enough target range. And then, by the way, if we do get up there and hit it, whether we get a reaction or not, a break above that level is going to be very bullish because that will be big resistance taken out, and as well as a downtrend line that's going to bring in a lot of buyers if that happens, if and when that happens. And that would take us up to those next targets on both QQQ and ES. And ES, that target's about 4,300. So there is my near-term outlook and intermediate-term outlook and targets for you guys. And then like I said, you will definitely hear from me if all of a sudden we do this today or early next week. And then I'll be talking about those downside targets, but they're not very complicated. They're the same targets I laid out for you before we even entered the first of the year, I believe. And that is back when QQQ topped, that gave you my swing targets, and that's still it right there. It's not much more. Well, now it is. It's a little more because we bounced. Remember, from where we were here when I recently, reversed, I said, look, the risk reward, worst case, I see a meltdown. It would be quick, 12%, get over with and bounce. Yeah, not kind of still leaning towards we bounce first, then later on we go down and go at that level there. All right, let me wrap it up here, and I will probably stop here and take a look and see if there's any individual stocks that stand out. I've mentioned Amazon and the same ones that I mentioned at the last time we went long, Zoom, and some of those that I like, and pretty much anything tech. Facebook looks good. A lot of those names look pretty strong. And Bitcoin, still looking at that, still near-term bullish on Bitcoin as well. Needs to do a little work here, but again, I told you I wouldn't go into it in this video, so I'll cover that later. This has been Randy Finney with Right Side of the Chart. Have a great day.